What's up, my fellow financial adventurers and future millionaires? Or at least, less broke than yesterday heirs. Your boy Kamapoko, the noob FX trader extraordinaire, is back at it again with another US dollar to Japanese yen market analysis. Stick around till the end because I'll also be dropping some crucial wisdom bombs. You won't want to miss them. So, how were your trades yesterday? Mine? Oh, just another classic Kamapoko special. I was eyeing a sweet short entry, practically had it wrapped up in a bow, but then, poof, no trade. Nada. Zilch. Did I cry myself to sleep? Maybe a little. But then I remembered, we're not here to trade, people. We're here to grow our sweet, sweet moolah. If a high probability entry doesn't smack you in the face like a rogue baseball, then ignore it. Seriously, just pretend it's that one awkward relative at Thanksgiving. Just ignore. No entry means no money gained, but also no money lost, and in this crazy market, sometimes that's a win. Our goal isn't to trade. I said it twice, cause it's that important. Write that down. Tattoo it on your forehead. You do you. Before we dive into today's analysis, let's take a quick peek at yesterday's market. If you're not into reliving past glories, or past faceplants, feel free to hit that fast forward button. I won't be offended. Much. Yesterday, the 1 hour and 4 hour charts were screaming, downtrend. Louder than my alarm clock on a Monday. If you count the Elliott waves, and I do, cause I'm fancy like that, it looked like we were on the verge of the 5th wave. So naturally, I was eyeing a sweet pullback sell near the previous low. Then I zoomed in on the 5-minute chart, and what do you know? A mini uptrend was brewing, with the last swing low chilling right here. So technically, we were still looking bullish until that baby broke. Entering after it broke would have been a terrible risk reward, like trying to catch a falling piano with your face. I was hoping for a new high and a fresh swing low, but alas, the market had other plans. It's like it enjoys messing with me. Looking back, and isn't hindsight 2020, or in my case, 20/200. If I had to enter, it probably would have been right here. The price didn't make a new high, it busted through the temporary uptrend swing low, and after this lower wick candle, it didn't even try to rally. That's the market telling you, bears are in the house, baby. So, a short entry on the retest of this resistance turn support line. But let's be real, I probably still wouldn't have pulled the trigger. My trigger finger is more of a trigger, maybe later finger. Did anyone actually trade yesterday? Spill the beans in the comments below. I want to hear your war stories. Also, just a friendly reminder. I post super serious, detailed market analysis on my blog every single day. If you're into that kind of responsible, adulting stuff, the link's in the description. And I'm trying to use the YouTube community tab more often to share market updates. So hit that subscribe button if you want to stay in the loop. Alright, let's get to the main event. Today's market analysis. For the weekly chart, you'll have to check my blog or next week's video. Seriously, missing the weekly chart is like going to a party without pants. You're gonna have a bad time. For now, we're starting with the daily. Alright, feast your eyes on this daily chart. I'm calling this the most recent high, and this right here, the last swing low. Right now, we're in a massive price correction, chilling near that last swing low. This price zone has been a hot spot for a while, acting as both resistance and support. So, my spidey senses are tingling, telling me the buyers are about to swoop in like superheroes. Next up, the 4-hour chart. This is the most recent low, and this, my friends, is what I'm calling the last swing high. The price hasn't actually broken that lowest low with a full candle body. Instead, it's just been kinda bouncing around, like a confused squirrel. And finally, the 1-hour chart. This is the most recent low, and this is the last swing high. On the 1 hour, it looks like the 5th wave of the downtrend has officially finished. If you zoom in on the 5-minute, this area is just a chaotic mess, basically a big old sideways range. It's like the market is having an existential crisis. Based on all this deep, profound analysis, I'm leaning bullish from now on. Yeah, I know the 4-hour and 1 hour are still pointing down, but based on my wave counts, I think the bears are getting tired. They've had their fun. Plus, that super important daily horizontal line is right there, practically begging for a bounce. Now, hold your horses, cowboy. We can't just dive into a buy yet. We need at least the 1-hour chart to officially switch to an uptrend. So for now, I'm watching for a clear break above this price zone. Once that happens, I'll be waiting for a pullback and then considering a long entry. My profit target? Just before the last swing high on the 4-hour chart. My ultimate dream scenario? The 1-hour chart makes a new low, creates a new swing high, and then I can snag an even cheaper entry. Because who doesn't love a good discount, especially when it comes to money? The lower time frame price action is super sluggish right now, so it might be a while before we see a good trade setup. Time to catch up on some Netflix, I guess. But if you're feeling antsy and just have to trade right now, you could consider a short. Look for entry points on the lower time frames and aim for around this area. Just saying. I'll also try to keep my blog updated with the latest market vibes. And that, my friends, is a wrap for today. On this channel, I'll be sharing market analysis and my personal trading adventures, the good, the bad, and the embarrassingly ugly. So if that sounds like your cup of tea, go ahead and hit that subscribe button, smash that like button, and drop a comment. Only if you're interested, of course. No pressure. See you next time, and may the pips be with you.